Hi, I'm Ellie, and this is Learn with Stash, where we talk about money, financial wellness, and all the other things your parents have been trying to get you to do for years, but you haven't gotten around to it. Oops. Stop letting their demands haunt you in your sleep. Sit back, relax, maybe even kick your feet up, and come learn a thing or two about how to invest your money for the long term. Did you know that all the money in your savings account is going to slowly shrivel up, kind of like how a plum becomes a prune, like a tomato under the hot Sicilian sun, like that hydrangea plant you forgot to water? Yeah. The money you have in that savings account is going to gradually decay over time, thanks to inflation, unless you start investing, which will enable your money to flourish and grow over time. A recent survey from Gallup found that 50% of Americans own stock. That means that 44% of America is missing out, big time. They may be asking themselves, why should I invest in stocks? What's the big whoop? Stocks are for finance dudes on Wall Street to worry about, not me. Wrong. You don't need thousands of dollars or an economics degree to get started. There is complexity to the stock market. It can be as intimidating as meeting the in-laws or your lifelong hero. Luckily, the basic concepts are pretty straightforward, and innovations like fractional shares help make investing something for everyone. All investing is a little bit risky. You could lose a little bit of money, but don't you worry. Stocks are frequently a part of a well-balanced, diversified portfolio. That's because over the long term, stocks have a greater return on investment than other securities, like bonds. At the same time, stocks present a little bit more of a risk because they tend to be more volatile, meaning stock values often swing up and down more dramatically than bonds. Finding your sweet spot with investing can help you thread the needle between risk and reward. And with the power of compounding, the earlier you invest, the greater your earning potential. Let's get into a little hypothetical about how investing your money over the long term can pay off.
Let's say someone invested $1,000 in an index fund
25 years ago. If that investment earned an annual compounded rate of return of 8%, the portfolio would be worth $7,340 today. And that's without putting any additional money into your fund. None. Zero. Resist the urge to buy that new handbag or video box 3000 and put your money to work. You will thank yourself later. And maybe me a little bit. That just about does it for now, folks. Feel free to like, subscribe, the whole shebang. See you next time on Learn with Stash. Bye!